So here's a quick take on the euro dollar suggestion of going bearish. If you're looking at the fibs, well, you can tell from it really that they're not. Here, for instance, you're looking at an 89.3. 78.6, and from this one a 50%, and that probably tallies with a 33 or something in terms of that one. You could look for some clusters. There's a 38 to 50 and a 78.6 here. It's quite. Is that 89 on? Those two, there's a precise cluster that comes across. Okay, no, it's just 3850 on the higher ones. So yeah, okay, even if you have some other reason for going short based on market psychology, then it doesn't really matter so much. But you might want to ask yourself, do you just enter, or do you do something else about it? So here's the here's the high, which is a continuing uptrend actually. So you might ask yourself there, and it's hitting support here. Do you really want to go bearish? So if you want to go bearish, you really have to look at is price turning. So if you look at the 15 minutes, as opposed to just entering. So here you've got a trend, it kind of moves a little bit sideways, pops down, it really consolidates here. And if I was looking for a break of trend, I'd be looking for a break of this low, that one there. And I'd say, well, once that's broken, I want to be looking to either get in with that as the high, because that's a support resistance level, and then if I'm reasonably assured of my downtrend in momentum, another attack on it would be look for some kind of pullback on the lower time frame. So here you actually have a pullback to this level. Look at that 5 minute, you might want to pop down to like the 2 minute there and see what's actually happened. So you have actually then got a pullback, indecision candle, and if you're Morgan, you're probably even looking at the 1 minute. Can I even go back that far on 200 units? I don't know. There you go. Okay, so here on the 1 minute you have the indecision candle, so you could even get in on a really tight entry there if you were gutsy enough to do that, but then have a really good sort of risk reward on that. And that's really what you're looking for. You're looking for some kind of price action that's telling you that price is actually stalling. So here price is continuing an uptrend. It's at a 78.6 retracement, which is the maximum you'd expect on one of the levels. It's actually a pot beyond on the basis of the prior high on the higher time frames. But you're looking at, for this sort of thing, you've got price comes here, it's stalling. This is price stalling, and you've got sitting on a support resistance level, that high, that low, and then it breaks down. And so you're either looking to take the break on the 15 minutes or something, or scale down, look for that little pullback there that you've got. Now, pullback doesn't look like a pullback, but it is. So that's the type of thing you're looking for, rather than sort of ended up here and say, oh, I've done really well, whatever. I read that one right. It's when you're trading, you should always look for confirmation. Even if you have a notion that something is coming down, look for price action to tell you that yes, it's coming down, because what you have as I said, you have a stalling price. Okay, that's basically that. A little bit of a consolidation, bit of upturn, down, prices consolidating, and it's breaking the support resistance level, and that's where you should be getting in, not up here, because you don't know what's happening. And it's certainly been in the trade a long time. You're anticipating price action here coming down. This is confirming price action is coming down, and that's the difference between a technical trader and somebody who's pissing in the wind, losing all their money. Okay, that's it for me. I just thought I'd share that perspective on the euro dollar short notion. I'm not actually trading today. I've got uni and shit to do, and so I did have a glance. There were some sort of short setups this morning. I didn't really have time, and I was tired, so I've laid off the charts today. Actually, I've been sorting some other stuff out. Back to the grind next week. But I thought I'd throw that in since it's fresh, and say, oh look, this is what you're looking for. So really, you're looking at this, you're saying, okay, price has come down, it looks to be trending down there, but price comes back on itself, higher high. But you can see here it's consolidating, so you might say support resistance. If it's breaking lower than that, I want to be in the trade. You could use a higher stop, or you could use that stop at this point. And if it breaks, then you're in on the trade. Or if you miss that, you can then wait for it to pull back. You know, it might have come down here and then pull back. You could have used this as the pullback into averages, but on the lower time frames you do have this area as well, down on the 1 minute. And you just have to skip through them really and see what's your best area of entry. Well, you know, retrospectively that is. But you don't know, because you got a very bullish candle after that and then it pops down. So you might want to give yourself a liberal stop on something like that, because you don't really know. But it's, you know, the price action tends to work out well normally. 1 minute is very volatile, so you never know. Anyway, I just thought I'd pass that along. What you should be looking for is that sort of area of consolidation before entering, and not just entering on a whim. You may get some right, you may get quite a lot right, but ideally, if you want to be consistently right, then look for the price stalls on the lower time frames. That should always be the case. Okay, that could be a reason for you coming out of a trade as well. If price is stalling somewhere, then if it breaks down below here, then if you've got in a long trade, you want to be out of the trade. Okay,